It's always borne out in regards to hindsight, but do you think today could potentially be a turning point for the market?
I wish it was a turning point, but in the end, although we did perform better than expected, we were still down by 0.7%. And if we do have a look at this chart of the Australian share market over the last 1 year, this is actually the 30-day chart. So if I change to the 1-year view, there are signs that perhaps we could have seen the peak for the year on the 18th of October. There's only just over 1 month left, or about 30 full trading days before the end of the year. So I guess it really does depend on whether we do see a resolution in the US. Now, the reason why the Australian market was down was that US performance that we saw overnight, as well as commodities. I mean, to see a fall of 4.8% in oil prices, just incredible. The S&P 500 down by 2.3%. We're now seeing the Nasdaq as well as the Dow Jones Industrial Average down below the 200-day moving average. Having said that, the Australian market performed very well today. If we have a look at the intraday graph of the Aussie share market, this is what it looks like. And if I turn this way, you can see really where that turning point came, and that was better than expected job numbers. Incredible set of numbers coming through. We saw 10,700 jobs being created. The market was only expecting to see 500 jobs being created, and that's really on the back of those full-time jobs. Incredible 18,700 jobs, and that's the 5th consecutive month that we've seen gains in those full-time numbers, and it contradicts directly with the ANZ job ad numbers, where we've seen 7 consecutive months of declines in those actual numbers, and comes on a day where Qantas actually mentions that it's cutting jobs as well. So a massive turnaround for the Aussie share market on the back of those job numbers. And in fact, if we just have a look at how bad it was in the morning for the Aussie share market, in the top 20 there were no stocks trading higher. We saw losses in every single blue chip company in the top 20. By the end of the session, we saw 2 companies trading higher. In the morning, only 8 companies in the top 200 were trading higher. By the end of the session, we saw 50 companies in the top 200 trading higher. Not surprising to see the materials, the energy sectors being sold off quite heavily. They were the worst performing sectors. The property sector also joined those ranks by the end of the session. And the banks actually saw an improvement. With the exception of ANZ, we saw the big 4 banks improving throughout the day, but ANZ just got worse. It was down by about 3.5% in the morning, down by 4.5% by the end of the session. It was trading ex-dividend, but it did show a larger loss by the end of the session. And interesting to see what happened in the consumer space. We saw consumer staples only down by 0.1%, making it the best performing sector, which is understandable. But the consumer discretionary sector not down by too much, actually the second best performing sector on the market on the back of some broker upgrades.
Corporate news about today, a late breaker if you like. Lynas getting some great news coming out of Malaysia in regards to a court challenge to its refinery, and in the end their shares closing up 11.8%.
I think a sense of relief for Lynas shareholders. It's been a volatile ride throughout the last month as we wait for this High Court decision from the Malaysian High Court, and it has lifted that injunction. Now, Lynas was granted a 2-year temporary operating licence for the Malaysian operating plant, but 20 days after it was granted this licence, it was actually served with an injunction, and it was meant to start processing from this plant this month. So the longer that this injunction was in place, the more it would impact on the company's own forecast and their timetable for being able to, I guess, sell rare earths into the market. Now, rare earths, the reason why it's so attractive at the moment is all because of China's export quotas. Now, they've really pretty much stopped exporting most of their earths to the rest of the world. And if we have a look at China, it's responsible for more than 90% of rare export sales. But if we have a look at rare earth reserves, in fact, China doesn't have a lot of the reserves. It's got 1/3 of the world's reserves. So the point is that rare earths aren't that rare. In fact, it's just the development time of the mine which is essential to be able to get them out of the ground. And one of the advantages that Lynas has had has been that it's been a first mover in this regard, except for the problems that it's had for its Malaysian processing plant. I guess one of the huge positives is that support that we've seen in rare earth prices. But we have seen some of the bubble coming out of prices as well. If we have a look at cerium oxide, now this is around about 50% of Mount Weld's composition, and this of course is Lynas's project. Back in 2009 we saw prices under $4 a kilo. By 2011, prices were at $102 a kilo. We've now actually seen prices pull back, so they're around about $16 a kilo. So way above those prices below $4 back in 2009, but still way off those prices that we saw in 2011 at $102 a kilo.